Okay, so once again, good evening everyone. For this evening, we will discuss diluted earnings per share. Okay. So, as an introduction, when capital structure of an entity is simple in the sense that it only consists of ordinary share capital, and if wala mga non-convertible securities, basically the computation of the earnings per share is easy. So, if ang given sa for a certain corporation, so if naalay uh, ordinary share capital lang ang composition sa imong shareholders equity o normal nga preference share, then, simple lang ang computation sa atong earnings per share. So, basically, normally equal lang atong basic o undiluted. Okay, so, also, the net income minus the preference dividend is simply divided by the number of ordinary shares outstanding or by the average share outstanding, whichever is appropriate. Diba? In the computation of basic earnings per share, our formula is net income. Diba? In the computation of basic earnings per share, that's net income. Your net income should be net of the preference dividends, okay, available for the preference shareholders. So, depending on the type of preference shares, diba? So, we need to identify if cumulative or non-cumulative ang preference share because it will depend the amount of the net income kung nasa tamo minus ang preference dividends if cumulative or non-cumulative siya. So basically the formula to compute the earnings per share, which is the basic earnings per share, you have the net income and the outstanding shares. Outstanding ordinary shares, or we compute for the average. Okay, average outstanding shares. So what do we mean by diluted? Okay, but if the capital structure of the corporation or if the entity is complex na siya, when you say complex, dili lang sa normal nga na preference share, dili lang sa normal nga na ordinary share, but what if na mga potential ordinary shares? Or let's ditawag na to sa potential ordinary shares. Kasi pasabutan ng potential ordinary shares. Sir, okay, na mga items na mga items, na mga transactions na pwede sa ma-convert into ordinary shares. And take note that the formula of our earnings per share computation, diba, our denominator is the outstanding shares or outstanding ordinary shares. So what if naatay mga potential ordinary shares or gitawag nato sila as potential diluters? Okay, potential diluters. So the computation of the earnings per share, because of these potential ordinary shares and let's we call it also as potential diluters, the computation of our earnings per share nahimo sang complex karon. Medyo ni complicate siya because of these potential ordinary shares or potential diluters. Okay, what are these potential diluters? Diba from the word itself, diluters. Okay, kung may diluters, i-dilute niya or iyang paubsan ang numbers or iyang paubsan ang imong earnings per share. Munang gitawag sa diluted earnings per share. From your basic earnings per share, it will dilute or iyang ubsan ang imong earnings per share. Okay. For what reason? Because of the potential ordinary shares. Because if there are potential ordinary shares, if there are items na pwede ma-convert into ordinary shares, di ba affected imong denominator? So, if affected imong denominator, mo increase ang, since it's a potential ordinary share, it would increase your outstanding ordinary share. Okay, so therefore, basically, it would decrease or dilute your earnings per share. So, that's why it is called diluted earnings per share. Who are these? Okay, so in other words, potential ordinary shares a financial instrument that represents future issuance of ordinary shares. So, basically, these are financial instrument, okay, that represents future conversion or future issuance of ordinary shares. So, who are these potential ordinary shares or potential diluters? So, we have three types of potential ordinary shares. Okay, first, you have the convertible bond. Okay, convertible bond, payable. We know that this instrument is a, diba, compound financial instrument siya. So, if dili nimo sa dili nimo sa i-convert, then may mo sa liability. Pero pag imo po sa i-convert, pwede sa ma-convert into ordinary shares. Okay, so that's why it's considered as potential ordinary shares. Second is you have convertible preference shares. Diba? Pwede na to i-convert ang preference share into ordinary shares. Convertible preference shares. So from preference share, ato sang i-convert into ordinary share. And the last one is you have the share option and share warrants. Okay, di ba familiar? This part of the liability topics, di ba? So, yung share options, this is related to the employees. Employees have the right, okay, to purchase shares from the corporation. Okay, and share warrants also, this gives the shareholders, existing shareholders, the right to purchase the shares of the corporation at a lower price, di ba? So, kung i-exercise nila ang share warrants, also the share options, this refers to the employees of the corporation. So, these are the three types of potential ordinary shares. So, kani sila tulo, okay, because it is potential or pwede siya ma-convert into ordinary shares. Okay, that's why pwede nila i-dilute ang amount sa imong basic earnings per share. Okay, so how do we we have dilution and anti-dilution. So what do you mean by dilution? So it arises when the inclusion of the potential ordinary shares decreases the basic earnings per share or increases the basic loss per share. In this case, the potential ordinary shares are diluted securities. So if these items, di ba, tawag na ito dilution, kanusaan na ay dilution. So if it would decrease your basic earnings per share or it would increase your basic loss per share. So if these items, would decrease your basic earnings per share or it would increase your basic loss per share, then these items are considered as dilutive securities. Okay, or they are they are considered as dilutive securities. So therefore, it would decrease or it would dilute the value of your earnings per share or it would increase the value of your loss per share, basic loss per share. Anti-dilution also arises when the inclusion of the potential ordinary shares increases basic earnings per share or decreases basic loss per share. So, anti-dilution po sa baliktad. Since it's anti-dilution, so they are considered as anti-dilution or anti-dilutive if baliktad ang effect niya. If we include these three items in the computation of the earnings per share, if it would increase your basic earnings per share or it would decrease your basic loss per share, therefore it is considered as anti-dilutive or there is anti-dilution. So they are considered as anti-dilution. In this case, the potential ordinary shares are anti-dilutive and ignored. Take note, if this potential ordinary shares, if ang effect niya in the computation of your earnings per share is anti-dilutive siya, pasabot, it would increase your basic earnings per share or it would decrease your basic loss per share. It is ignored in the computation of the diluted earnings per share. So basically, since it's dilutive, so ato lang i-appeal, i-include in the computation of dilutive earnings per share are those those dilutive securities. Katong makapaubos sa value sa imong earnings per share. So if kung dili sa makapaubos sa value sa imong earnings per share, basic earnings per share, then ignore that in the computation. Disregard, ayaw sa i-appeal in the computation of your diluted earnings per share. Under diluted earnings per share, we use the as-if scenario. Yung si as-if scenario, we assume, diba, we have three types of potential ordinary shares. So, under as-if scenario, under as-if scenario, we assume that this convertible bond is converted into ordinary shares. So atong assumption kani siya ma-convert gid siya into ordinary shares. Okay, this will be converted into ordinary shares. That's why as if ma-convert siya. Okay, because dili man at all times, di ba, ma-convert ay mga convertible bonds payable. What if wala gi-exercise ni issuer or wala gi-exercise sa holder sa bonds? Okay, so pero in computing the diluted earnings per share, we use the as if scenario. So we assume that this convertible bond is converted into ordinary shares. Same with convertible preference shares, we assume that this convertible preference shares as if it was converted into ordinary shares. And same with share options and warrants, we assume that in computing the diluted earnings per share, these options and warrants were exercised or are exercised by the shareholders or the employees. Okay, so ang ato assumption dire nga these three types of potential ordinary shares, ma-convert siya. Okay, ma-convert siya into ordinary shares. Okay, that's the assumption. So if naay problem, automatic our assumption is kaning convertible bonds can be converted into ordinary shares. Not unless if maotro siya kung ang given sa problem like actually gi-convert or depending on the problem kung kano sa sila gipang issue. So let's discuss that later because we have different scenarios for each item. Okay, under convertible bond, let's start with convertible bond. How do we account convertible bonds? In computing our diluted earnings per share, how will it affect the computation of our diluted earnings per share? So first, let's discuss the convertible bond. Okay, the computation of diluted earnings per share assumes that the bond payable is converted into ordinary share, di ba? As if approach. So accordingly, adjustments shall be made both to net income and to the number of ordinary shares outstanding. Di ba? We have the formula in computing the basic earnings per share. Net income divided by the outstanding ordinary shares. So on average. Okay. Since this is our base amount, di ba? Kaya atong identify if this convertible bonds payable dilutive ba siya? Is it a dilutive security? Okay. Kay kung mo compute tag diluted earnings per share tapos dili di sa mas ubos sa imong basic earnings per share, so dili ta mag-compute ana. Di ba? We ignore the convertible bonds payable because again, we only consider those dilutive securities. Okay, so if there is convertible bonds payable, since the assumption is as if na-convert siya, okay, especially if outstanding at the beginning of the year, so the assumption is on January 1, it is assumed that it is converted into ordinary shares, your convertible bonds payable. So, ang ingon niya dire, in computing the diluted earnings per share, the net income is adjusted by adding back the interest expense on the bond payable net of tax. So, unsa may tabo in computing your diluted earnings per share if you have convertible bonds payable. Okay, diluted. So, the formula for diluted earnings per share, if you have a convertible bonds payable, you have net income, i-add back daw nato plus interest expense dapat naka-net of tax. Tapos divide by the outstanding ordinary shares plus the potential, di ba? So this is the beginning balance of outstanding ordinary share plus the potential ordinary shares. Question, ngano nga tumang i-add balik ang interest expense from the bonds payable? Diba? Why we add back the interest expense in computing the net income for the diluted earnings per share computation. What do you think? Need kuhaan og present value? Okay, how about the others? Okay. Okay, what do you think? Kung say reason nga nung gi-add na to siya? Isa lang ang na-answer. How about the others?
Ma-convert man siya into
Ma-convert sa into ordinary shares? Okay. Okay, that's correct, 'di ba? Because our assumption is the convertible bonds is to be converted into ordinary shares. So kung at the beginning pa lang of the year, 'di ba, natay bonds payable, tapos beginning pa lang of the year atong assumption ma-convert sa into ordinary shares, wala na tay liability gina-account. Therefore, we don't recognize interest expense na. 'Di ba? Wala na tayong interest expense because our assumption at the beginning of the year, 'di ba? Kung na-outstanding sa at the beginning of the year, it is already converted into ordinary shares. Therefore, wala na tayong liability gina-account. So we account the bonds payable as converted into ordinary shares. So wala na tayong interest, 'di ba? Because wala naman tayong liability gina-account because our assumption is ordinary share na siya. But the net income, 'di ba? It's net income. It's the revenues or let's say sales minus all the expenses, even the taxes. 'Di ba? Net of tax. Therefore, we need to add back the interest expense because we assume that the bonds payable is already converted into ordinary shares at the beginning of the year. So since sa atong computation sa itong net income, na-appeal man dira ang interest expense gikan kang bonds payable, but in the computation of diluted earnings per share, we assume that this bonds payable is converted into ordinary shares. That's why we need to add back the interest expense nga atong gi-minus in computing the net income. Okay. And make sure that it is net of tax. So interest expense net of tax. Siyempre, dapat net of tax siya. Okay, so net of tax, normally, because it is a corporation setting, so, mabantayan ninyo tag 70%. 'Di ba? Ang net of tax mo to kung gisulat ka gaina interest expense times 70%. Okay, because 30% pa ang existing corporate rate, tax rate nato sa corporation. Okay, so I hope na gets nganong gi-add nato ang interest expense balik because again, we assume that the bonds payable is already converted into ordinary shares. So, wala na itong nag-recognize of interest expense. That's why we add back the interest expense in the computation of the diluted earnings per share under bonds, convertible bonds payable, if there is convertible bonds payable. Of course, the original outstanding ordinary share plus, diba, the potential ordinary shares. Let's say, for example, this 5 million bonds payable per 1,000 pesos is can be converted into 10 shares. Therefore, that's 5 million divide 1,000. So, you have, pila man na, 5,000 bonds times 10 shares. So, you have 50,000 shares. So, kung ma-convert siya into 50,000 shares. So, therefore, we add the 50,000 shares. But, depending on the scenario. Okay, so, tulo ka cases pwede mahitabo, di ba? In the computation of your potential ordinary shares. Okay, so let's have the illustration as presented in the book. Ako lang siyang gikan dire since there is a book is presented na ang 3 ka scenario. Okay, this is the case if you have a convertible bonds payable and you need to compute for the diluted earnings per share. Okay, so an entity had the following securities outstanding at the beginning of the current year. So, naakay 10% convertible bonds payable each. Okay, 1,000 bond convertible into 10 ordinary shares. Therefore, every 1,000 peso bond can be converted into 10 ordinary shares. Since you have 4 million worth of the bonds liability, bonds payable, so that's 4 million divide 1,000. So, you have 4,000 bonds times the number of shares per bond. So, pwede nimo siya ma-convert into 40,000 shares. Okay, and you have the original existing outstanding ordinary share capital. Okay, that's 10 million, or you have the outstanding ordinary shares of 100,000. You have the net income of 5 million, and you have the income tax rate of 30%. Therefore, 30% ang tax rate. So, to identify if this convertible bonds payable is dilutive security, so we need first to compute pila atong basic earnings per share. Why? Because mo man atong basis, di ba? If aton isang i-consider as potential ordinary shares, dilutive ba ni siya by comparing the amount na imong ma-compute if mas lower ba compared to the basic earnings per share? Gidilute ba niya ang imong basic earnings per share? So first, we need to compute the basic earnings per share. So same formula with the computation. You have the net income, okay, minus divide by the ordinary shares actually standing. Di ba yung gamit actually standing, which is katong actual nga standing. So, based on the problem, since convertible bonds man itong istoryahan dire, wala tayo i-deduct sa atong net income because wala tayo preference shares. So, buo na to gamiton ang net income nga 5 million. Then, divide by the actual or ordinary or outstanding ordinary shares. You have 100,000 shares. Therefore, your basic earnings per share, nawala ang amount. So, that is 5 million divide 100. So, 50. Okay. So, para ma-considered si convertible bonds payable as dilutive securities, dapat ang computation nato sa itong diluted earnings per share would be lower than your 50. Okay, if dili sa mo lower than 50, then we ignore the computation. Di ba? We ignore the bonds, convertible bonds in the computation of diluted dili ta mag-compute og diluted earnings per share. So tama lang ta kang basic earnings per share. Okay. So how are you going to compute dilutive earnings per share? So this is how we compute the diluted earnings per share. You have the net income, okay, di ba? Plus the interest expense net of tax. Therefore, we have an interest expense of 400,000, that's 10% times the 4 million principal, you have 400,000 interest expense. That's gross of tax pa na siya, di ba? Then income tax of 30%, that's 400 times 30%, that's 120. Therefore, the interest expense net of tax is 280,000. Pwede na po na sa 400 times 70% dito para di na mamalangan. That's net of tax. So therefore, our adjusted net income is 5,280,000 na because we add back the interest net of tax. Because again, we assume that the convertible bonds is converted at the beginning of the year. Okay, beginning of the year based sa kaninga problem. So therefore, we don't recognize the expense anymore because our assumption is kasugod pa lang converted na sa into ordinary shares. Okay, so how about the ordinary shares? So, since as if approach, you have the actual outstanding ordinary shares of 100,000, then as if we convert the ordinary shares, the convertible bonds payable to ordinary share, that's 40,000 shares. Therefore, we have now a total ordinary shares of 140,000. Same thing mo, sir, wala lagi siya average. Okay, sige, let's see. So, di ba? So, to compute the diluted earnings per share, you have the adjusted net income of 5,280 divided by your total ordinary shares. Considering the convertible bonds payable nga na-convert into ordinary shares. Therefore, the diluted earnings per share is 37.71. Therefore, ni-dilute ba? Okay, the answer is yes. Di ba? From 50 basic earnings per share to 37.71. Therefore, the convertible bonds is considered as dilutive securities. So, na-dilution na itabo. So, observe that if a convertible bond payable is outstanding during the entire year, so what if, di ba, mention sa problem na outstanding begin January 1, 2020, okay, ang bonds payable. Therefore, our assumption that it is assumed that the conversion takes place at the beginning of the year. That's why kung i-average pa nato ni siya, times 12/12 gihapon siya. Diba? Kaya wala lagi gi-average dire because the assumption is if outstanding sa at the beginning, so it is assumed that it was converted at the beginning of the year, or the conversion takes place at the beginning of the year. Okay, so that's the first case ha, nga outstanding imong bonds payable beginning of the year. So mo ni mahitabo if outstanding sa beginning of the year. What if na second case? What if the bond payable is issued during the year? So pasabot gi-issue ang bonds payable during the year. So dili sa outstanding at the beginning of the year. So assume that the convertible bonds payable is issued on April 1. So gi-issue ang bonds on April 1 of the current year. In this case, all conversion computations will be made for 9 months only from April 1 to December 31. Of course, because the bonds is issued on April 1, therefore our interest will start on April 1 up to December 31. At the same time, when we compute for the outstanding shares, potential outstanding shares from the convertible bonds, ato po sa i-prorate. Okay, for 9 months because April 1 man siya. Okay, so kung tanawon ninyo, the computation of the adjusted net income is different from the first scenario. Okay, why? Because the interest is now good only for 9 months. Okay, kung makita ninyo, interest expense, that's 4 million times 10% times 9 divide 12. Again, because the bonds was issued on April 1. So that's 300,000 interest expense, then net of tax of 30% nga 90,000. Therefore, your interest expense net of tax is 210,000. Therefore, the adjusted net income is 5,210,000. Okay, tanawa ang total ordinary shares nga atong gigamit pag-compute sa diluted earnings per share. Same, you have the actual outstanding ordinary share, but tanawan ninyo ang katong potential ordinary shares from the convertible bonds. Diba? It was average. Diba? Kanos aman sa na-issue, so from April to December 31, that's 9 months outstanding. Okay, so 4,000 or 40,000 shares times 9 divide 12, so you have 30,000. Therefore, your average or total ordinary share to compute for the diluted earnings per share is 130,000. Then, you can now divide 5210 divide, okay, namali na dapat divide. Okay, divide 130,000, so that is 40.08. Question, dilutive ba imong convertible bonds in this case? Yes or no? So again, I'll base the attendance sa inyong participation sa chat box. So mga upat pa ni ang present ha as of this time. Question, based on this computation, dilutive ba? Considered ba as dilutive ang atong convertible bonds? Yes? Why?
Below man sa basic earnings per share, sir.
Okay, because it is lower than your basic earnings per share of 50. Diba? Therefore, dilutive siya. So, we can now compute the diluted earnings per share. Needless to say, the basic earnings per share would remain the same. So, dili maapektuhan ang computation sa imong basic earnings per share ha. Okay, kanus ara sa maapektuhan, di ba? Sa first case, second case, walay effect sa imong basic earnings per share, but it has effect on your diluted earnings per share. Okay, in this third case scenario, kanina ay changes sa computation sa imong basic earnings per share o sa imong diluted earnings per share. Why? Because the bonds actually converted. Diba? Na-convert gyud siya. So, at katong kagaina, we assume that it was converted as if, diba? As if scenario. But this time, the bonds was actually converted. So, what will happen in your basic earnings per share? and your diluted earnings per share. So let's see the illustration. So an entity had the following securities at the beginning of the current year. You have convertible bonds payable. Okay, that's 4 million. So therefore, every 1,000 peso bond can be converted into 40 ordinary shares. So same kagaina, 4 million divide 1,000, that's 40. Tama ba? 4 million divide 1,000, that's 4,000 times 40 ordinary shares. So total, pwede siya ma-convert to 160,000 shares. Okay, so ordinary share put capital actually is outstanding. You have 200,000 shares. Net income for the year, you have 5 million and income tax rate of 30%. All of the bonds were converted into ordinary shares on October 1 of the current year. So the bonds were converted on October 1, actually ha, so na-convert gid siya, actually converted. Therefore, nadungagan gyud actually ang imong ordinary share. So pila na dugang, that's 40,000 na lagi ni. Okay. Tama kay naka-prorate man siya. So kano sama siya nadugang. So in computing your basic earnings per share, di ba, take note that our formula is net income divide average outstanding ordinary shares. So since you have 200,000 outstanding on January 1, tapos na actual conversion of the convertible bonds on October 1, which is 44,000 times 40 shares. Pero October 1 man siya, so we need to average. So that's October, November, December. That's 3 months outstanding. That's why you have 40,000. So you have average ordinary shares of 240,000 in the computation of your basic earnings per share. So in this case, you have 5 million net income. Divide by the 240,000 average ordinary shares. So you have basic earnings per share of 20.83. Diba na changes sa computation? Why? Because there is actual conversion of the bonds. Okay, how about the diluted earnings per share? Okay, so January 1, you have the outstanding 200. Pila ang computation sa itong total ordinary shares. On October 1, di ba, whole amount sa 160. Whole amount sa shares, whole amount sa shares nga 160. So you have total ordinary shares of 360,000. The issuance of ordinary shares on October 1 is not average anymore because the convertible bonds are outstanding on January 1. So wala nini sa average. Ano man, di ba? Since outstanding sa beginning, regardless ma-convert sa or dili, ang whole amount atong gamiton because again, we use the as-if approach. Okay, so ma-outro lang sa computation nimo imong basic earnings per share because there is actual conversion, madungagan ng imong actual outstanding ordinary shares. In the computation also of your net income, tanawa, you have 5 million. Siyempre, ang interest nga imong i-compute is from January 1 to October at the date of conversion. Diba? At the date of conversion. Because since outstanding sa on January 1, therefore your interest will start on January 1 up to the date of conversion. That's why it's 9 months because that's from January to September 31. Because October 1, it was already converted into ordinary shares. So ang interest nimo proportionate ra pod siya. That's 9 over 12. So net of tax dapat, that's why times 70%. That's 210,000. So we add back the interest. Sir, what if, sir, ang naitabo, sir, gi-issue on April 1, diba, issued April 1, tapos, na-convert, actually converted on October 1. Naabay changes sa computation. Sige, what if inana ang case? Naabay changes sa computation sa imong basic earnings per share. Okay, naagyapon. So you need to di ba? Imo ya po sa i-proportionate. Okay, i-proportionate gyapon nimo siya. Okay, also with the interest expense, so ang interest expense nimo instead of January 1, you start with the date of issuance, April 1. So April 1 to October 1. So that's April, May, June, July, August, September. 6 months na lang siya. Okay, at the same time, ang imo pong uh, number of ordinary shares kani conversion nimo. Imo pud sang i-proportionate. Yes, outstanding since April 1 imong basis because na-issue siya on April 1. Okay, it was issued on April 1. So kani pod you need to proportionate. Diba? Sir, pila man sir? 9 months siya gyapon. Starting from the date of issuance up to katong December 31 because again as if approach, it is assumed on the issuance date that it is converted into ordinary shares. Okay, so based on this problem, you have diluted earnings per share of 14.47. Therefore, diluted security gyapon imong convertible bonds because, di ba, lower siya compared sa imong basic earnings per share nga computation. Okay, question so far. So that's the three. Yes. Balik sa example, ang example. Pag-compute sa basic earnings per share, April 1 ra gyapon outstanding. Okay. Ay actually pag abot sa basic earnings per share, even April 1 siya gi-issue pero na-convert sa October, wala din sa changes ani. Because we base, di ba? Nag-base ta sa atong basic earnings per share kung kano sa actually converted. Since na-convert sa October, so after within 12 months nga period, dito ka mag-start og count. So October 1 gyapon ka mag-start og count. Okay, October 1 gyapon ka mag-start og count padulong December. Pag basic earnings per share, even April 1 pa na siya na-issue. Because ang importante sa basic earnings per share, kanus sa actually converted. So it was actually converted on October 1, therefore mag-start imong computation sa averaging kung kanus siya na-issue, so that's October 1. Okay, outstanding within 12 months, so from October, November, December, 3 months gapon siya. So, wala din sa changes pag basic earnings per share. If this is the case, na-issue siya on April 1. Maotro siya pag abot dire kang diluted earnings per share. You need to adjust the interest. It should be from the date of issuance up to at the end of the year. Okay, but for the for the interest expense, it should start from the date of issuance up to the date of conversion. But for the computation of the outstanding ordinary shares, you need to average starting from the date of issuance. Okay, up to the end of December 31. Okay, so, sir, kung sa December 31 na convert sa basic earnings per share, that's 0. That's 0 over 12. Diba? Kaya kung averaging ta, that's kung 31, 0 na siya. So, 0 over 12. So, wala gyapon sa effect. Kumbaga, wala na account to as part of, wala na dungagan imong denominator. Pag basic earnings per share, ha? Basic earnings per share. Pero, the actual number of outstanding shares ni increase. Pero, in the computation of basic earnings per share, since averaging siya, 0 siya. 0 over 12 siya. Kay, di ba, pila man sa months outstanding from December 31, 0 siya. 0 over 12. Other question, before we proceed with the second type of potential ordinary share, which is the convertible preference shares. Nasabtan ra ba ni? How about the others? Okay, I hope masabtan na siya. Medyo dili pa ka, medyo, kaya kay isa-isa pa man ta, per, kuan pa ta, per type pa siya, per type of potential ordinary shares. Okay, so I guess no, so nasabtan man. So yes sir man yung mga tubag. So let's proceed with the second type of potential ordinary share, which is the convertible preference share. So we are done with bonds, convertible bonds. So let's proceed with the second type of potential diluters or potential ordinary share, which is the convertible preference shares. Okay, if there is a convertible preference share, the computation of diluted earnings per share also assumes that the preference share is converted into ordinary shares. Therefore, again, as if scenario, as if approach, we assume that this convertible preference share is converted into ordinary shares. So that's our assumption. Accordingly, the net income is not reduced anymore by the amount of preference dividend. Okay, therefore, di ba, pag-compute sa atong basic earnings per share, if there is a preference share, depending on the type of preference share, if it is cumulative or non-cumulative, di ba? But our formula is net income minus preference dividends divided by the outstanding ordinary share. But in the computation of your diluted earnings per share, if you have a convertible preference share, since the assumption is these convertible preference shares were already converted into ordinary share, therefore, wala na tayo dividends related to your preference shares. So, to compute for the diluted earnings per share, wala na. So, net income na lang siya. We don't deduct anymore the preference dividend because we assume as if these convertible preference shares were converted into ordinary shares. So, wala na preference, wala na dividends for the preference shareholders because na-convert na siya into ordinary shares. So, therefore, to compute the diluted earnings per share, so net income na lang siya, divide by the outstanding ordinary share plus the potential ordinary shares or the convertible preference shares. So, kung pila sa ka-shares i-convert into ordinary shares. So, the number of ordinary shares outstanding is increased by the number of ordinary shares that would have been issued upon conversion of the preference share. Okay, so again, in this case, we also have three scenarios. So again, nga nang wala na gani sa gi-minus dire because again, the preference shares is assumed to be converted into ordinary share. Therefore, wala na dividends available to your preference shares or preference shareholders. Okay, let's have the illustration. So first scenario, okay, this is the first case. Okay, 10%. Take note, this cumulative preference share capital. So that's 100 par, 30,000 shares. One preference share daw can be converted into two ordinary share. Therefore, pila ka shares tanan? That's 30K preference share. So that is equal to 60,000 ordinary shares. Because again, in the computation of diluted earnings per share, we assume that it is converted into ordinary shares. You have the actual issued ordinary shares na kay 10 million or you have a total of 100,000 shares. You have net income of 6 million. Okay, so again, before we can compute the diluted earnings per share and before we can identify that this convertible preference share is dilutive security, we need to compute first the basic earnings per share. So again, the formula is you have the net income minus the preference dividend, that is our adjusted income. So based on the computation, since the preference dividend is cumulative, di ba, we only deduct the preference dividend, magdepende if it is cumulative or non-cumulative. If it is cumulative, regardless declared or not, we need to deduct the preference dividend. But if it is non-cumulative, it should be declared, di ba, to be deducted in your net income. Okay, since it's cumulative, so regardless declared or not, so minus kita og preference dividend. So that's 3 million times the 10% or the rating of your preference dividend. So dala lang po sa taman, di ba, ang dividend nga pwede na to ihatag sa ila as preference. Okay, so 6 million minus 300, that's adjusted income of 5.7 million. Then, actual outstanding shares, you have 100,000. Therefore, your basic earnings per share is 57 pesos per share. How about diluted earnings per share? Diba? Again, as if na-convert siya into ordinary share because we assume that it is already converted into ordinary shares. Okay. At the beginning of the year, therefore, there's no available preference dividend na. So, wala na tayo i-minus sa atong net income. That's why our net income in computing the diluted earnings per share is buo nga 6 million. Okay. Then, the ordinary shares actually standing, 100. Assume issued ordinary share through conversion, diba? 60,000 to. So, therefore, we have a total ordinary shares of 160,000. So, pilang in diluted earnings per share? 37.50. Therefore, your convertible preference share in this case is considered as dilutive security. Why? Because, diba, it is lower compared to your basic earnings per share. Okay, observe that the conversion is assumed to be made at the beginning of the year because the convertible preference share, it's outstanding during the entire year. This is same with the bonds, diba? Katong first case, first scenario. Okay, it is assumed, okay, since yung balance at the beginning of the year man, so atong computation, whole year po siya. So, it is assumed converted at the beginning of the year. Okay, second scenario, di ba? So, what if preference share issued during the year? The preference share was issued during the year. Okay, so if the convertible preference share is issued on September 1 of the current year, so gi-issue sa on September 1 of the current year, the conversion computation will only be, okay, 4 months. So, same sa bonds, di ba? Issuance date at tanawon. Also, with the convertible preference share, we need to look at kano sa na-issue. So, let's say for the example, it was issued on September 1 of the current year. The conversion computation will only be 4 months from September 1 to December 31 of the current year. Basic earnings per share, walay effect ha. It would remain the same. Pag-compute lang sa diluted earnings per share. Because maapektuhan lang imong basic earnings per share if there is actual conversion. Okay, so therefore, if this is the case, gi-issue siya during the year, not at the beginning of the year. It is not outstanding at the beginning of the year. So in this case, issued siya and outstanding on September 1 of the current year. So your net income, 6 million. So maotro lang nato is the amount of your assumed issued ordinary shares. So we need to average, we need to proportionate. So from September 1, pila ka months outstanding, that's 4 months divide 12. You have 20,000. Therefore, the total ordinary shares to compute for the diluted earnings per share is 20,000. So, pila imong diluted earnings per share? 50. Pila ito kagain natong basic earnings. So, still dilutive gapon siya. Why? Because, diba, 57 atong basic earnings per share. And based on the information given for the convertible preference share, it was issued during the year, 50 ang computation. So, it's still dilutive security. So, dilutive gapon ang atong preference, convertible preference share. Okay, this is the last case scenario for convertible preference share. What if it was actually converted? Diba? In this case, it is actually converted. Nabay changes sa computation sa imong basic earnings per share. Yes or no? Diba? If this is the case, there is actual conversion of your convertible preference share, maapektuhan ba ang computation sa imong basic earnings per share? Diba kagaina sa duha ka case, walay effect, remain the same. Okay, the answer is yes, diba? There is an adjustment because there is actual conversion. So, naay actual na dugang sa imong outstanding ordinary shares. So, based on the problem, let's see preference share capital. You have 10%, 50,000 shares, 100 par cumulative, and convertible into 100,000 ordinary shares. Therefore, this preference share can be converted into 100,000 shares. And you have actual ordinary shares outstanding of 200,000, net income for the year 4 million. The preference shares were all converted into ordinary shares on October 1 of the current year. Therefore, there is actual conversion of the preference shares. So, it was converted on October 1 of the current year. The preference dividends for the entire year were paid in full before the conversion. So, in this case, gibayaran nila daan ang tanan preference shareholders before nila gi-convert ang preference share into ordinary share. Okay, so what's the effect in the computation of our basic earnings per share? Okay, so January 1, of course, 'di ba? So we need to compute the average ordinary shares because there's actual conversion. So January 1 outstanding, that's 200,000 or that's times 12 over 12. You have October 1 because on October 1 there is actual conversion of 100,000 preference share to ordinary share. Pila ka months outstanding, that's 3 months, 'di ba? I-average na to, that's 25. Therefore, to compute for the basic earnings per share, we have a denominator of average ordinary shares of 225,000. How about the computation of our net income? Okay, since the net income is 4 billion, okay, we need to deduct the preference dividend. Take note that the preference dividend are deducted from net income because the preference dividends were paid in full before the actual conversion. Otherwise, the preference dividends are ignored. So therefore, if the preference dividends were not paid, di ba, before the conversion, wala na tayo i-deduct na amount. But based on the problem, gibayaran man siya before the actual conversion, therefore we need to deduct because di ba napadulong gyapon to kang preference shareholders. Okay, because at that time wala pa man siya na-convert into ordinary shares. So that's why we need to deduct the 500,000 preference dividend. So that's 4 million minus 500. You have adjusted or net income to ordinary share of 3,500,000. Divide by the average ordinary shares of 2 to 5, so that's 15.56 diluted earnings per share. That's basic earnings per share. Okay, basic earnings per share of 15.56. How about our computation for the diluted earnings per share? So, January 1 outstanding, October 1, di ba, conversion date, di ba, ang whole amount sa shares. Again, because, di ba, even gani walay conversion, if it is outstanding on January 1, the whole amount atong i-account, di ba, as denominator for the diluted earnings per share computation. So kung naapoy conversions, the same ang assumption. So, wala na ta nag-prorate dire. Okay, that unless it was issued on different date. Okay, so total ordinary share of 300,000. The issuance of ordinary shares on October 1 is not averaged anymore because the convertible preference shares are outstanding on January 1. So, what if April 1, siya gi-issue ang preference shares? So, we need to average. So, from date of issuance na punta up to the date of conversion. Same application kagaina sa bonds, convertible bonds payable. Okay, so therefore, the diluted earnings per share is 13.33. Let's try to compare. We have 15.56 and 13.33. Therefore, the convertible preference share in this case is also considered as dilutive security because, di ba, mas ubos siya, mas lower ang atong na-compute. Okay, so that's the three scenario or cases for if there is convertible preference share. So again, bantayan ninyo kung na-issue ba sa during the year or if wala gi-mention sa problem, that's considered as outstanding. Diba? Outstanding at the beginning of the year. Tapos kung nabay actual conversion because it would affect your basic earnings per share computation. Question so far for convertible preference share. Nasabtan ra ba to? Okay, maayo kay nasabtan ra. Next, we proceed with the last type of potential ordinary shares. You have the share options and share warrants. Kani medyo complicated ang iyang computation compared to that tong duha ka type. You have the options and warrants. Di ba normally share options are granted to employees enabling them to acquire ordinary shares of the entity at a specified price during the definite period of time. So normally ginatag ni sa katong mga key employees, di ba? So they have the right to purchase shares of the corporation or of the company. While warrants or share warrants are granted to shareholders enabling them to acquire ordinary shares of the entity as at a specified price during a definite period of time. Okay, so medyo dahantag kinahanglan i-consider dire, di ba? Pag there is options and warrants. So by definition, options and warrants have no cash yield but they derive their value from the right to obtain ordinary shares at a specified price that is usually lower than the prevailing market price. So basically, the employees and the shareholders have the right to acquire shares of the corporation. So since they have the right, what if gi-exercise nila, so nagi-changes sa imong shares, di ba? Structure sa imong shares. Options and warrants are dilutive. Dilutive daw ni sila dahil considered as dilutive security if the exercise price or option price is less than the average market price. So we can say that the options and warrants are considered as dilutive securities if the exercise price or the option price is lower than the average market price. Okay, so kung mas lower ang price sa pagpalit ni employees and shareholders compared to the if ibaligya siya sa third parties, di ba? So there is the options and warrants are considered dilutive. However, for employee share options, the exercise price or option price shall include the fair value of any services to be supplied to the entity in the future under the option plan. So under share options, we need part of the exercise price and the option price is the fair value of services. to be supplied to the entity in the future under the option plan. So, under share option, so part of your exercise price and option price is the fair value of the services. Fair value of the future services. Okay, by offering the plan, option plan. Okay, so under this type of potential ordinary shares, natay gitawag na treasury share method. So we use the treasury share method dire. So options and warrants are included in the earnings per share computation through the treasury share method. What mean by treasury share method? It doesn't dili pasabot ani ha nga nag-acquire ta, nag-acquire ta og treasury shares. Okay, treasury share method. However, this does not imply that the entity has entered into a transaction to purchase a treasury share. So wala sa nag-refer sa katong nag-purchase ng treasury share nga transaction. The treasury share method is used to simplify the computation of incremental ordinary shares that are assumed to be issued for no consideration as a result of the options and warrants. So basically, ang potential ordinary shares under options and warrants is the difference between your it's the difference between the option shares and the assumed treasury shares. So this is your incremental ordinary shares. So mo ni ang atong i-add sa atong denominator, your incremental ordinary shares. So you have the option shares minus the assumed treasury share, then that is your incremental ordinary shares. So we have a following procedure to follow under treasury share method. So the following procedures shall be followed in the computation of this incremental. How do we compute the incremental? Diba? We have the formula already, option shares minus the assumed treasury shares. Then we can compute the incremental ordinary shares. So this is the procedure. First, the option and warrants are assumed to be exercised at the beginning of the current year or at the date issued during the current year. Diba? We also apply the as-if scenario here. We assume that these options, warrants were exercised or are exercised at the beginning of the current year if it is outstanding at the beginning of the current year, or if it is issued during the year, then on that certain date, on the issue date. Okay, we assume that the conversion happened on the issuance date. Okay, second is the proceeds from the exercise of the options and warrants are assumed to be used to acquire treasury shares at average market price. So, ang may tabuan kaning option price nato times the number of shares given mo na atong base amount to compute this one, the assumed treasury shares. Okay, and last, the number of incremental ordinary share is equal to the option shares minus the assumed treasury shares acquired. So, mo na itong formula, di ba, to compute the incremental ordinary share. So, di ba, medyo kwan sa subton, dagan kag i-consider, but let's proceed with the illustration para mas masabtan siya. So, again, first, under treasury share method, the procedure first is we need to assume that the options and warrants are converted into ordinary shares based on the date outstanding, or beginning ba or at the date of issuance. Second is we need to compute for the base amount para basihan nato sa atong kaning second nga amount, assumed treasury shares. And last is i-minus lang nato ning duha. So let's proceed with the illustration para mas clear siya yun sa pag-apply ang procedure. Kani po dire na po tayo mga different scenarios. Okay, so this is the illustration. You have net income, that's 5 billion. You have the ordinary share capital of 100 pesos par, 100,000 shares. So, total of 100,000 shares outstanding. Tapos, you have employee share. Naka-employee share. You have the option shares mo ni number sa shares nga imong pwede na to i-convert ang share option sa employee. You have the fair value of each share option, 20 pesos. You have the fair value of each share option. The option price of your share option is 130 and you have the average market price of 250. Question, dilutive ba ni siya or dili? Diba? So, ang sagay na itong timailan para ma-consider as dilutive ang imong options and warrants. Kay if it's not dilutive, di na ta mo proceed sa computation. Diba? Kay wala na, diba, ignore if it's not dilutive. Therefore, we need to identify first is dilutive ba siya before we continue with the computation. So, in this case, in this problem, dilutive ba siya? Okay. Yes, diba? Because we can say that the options and warrants are dilutive if your exercise price or your option price is lesser than your average market price. So, ito yung composition sa imong exercise price and option price. Since this is share options, so part of your exercise price is the fair value of the services. So, based on the problem, you have the option price of 130 and you have the fair value of each share options of 20 pesos. Therefore, your total exercise price or option price is equal to 150. We compare it to the average market price of 250. So, therefore, lower imong option price or exercise price. Therefore, dilutive ang imong options. So, we can now proceed with the computation of diluted earnings per share. But before we can proceed, we need to compute first your basic earnings per share. So, basic earnings per share, normal computation, that's net income minus the actual outstanding ordinary shares. So, based on the problem, you have 50 pesos. Karon, saan pag-compute ang diluted earnings per share based sa katong procedure kagaina? So, first, we assume that the share options are exercised at the beginning of the year. Since this problem, outstanding sa at the beginning of the year, kaya wala man sige mention kanus na issue. So, we assume na na-convert na siya at the beginning of the year. Second assumption is the proceeds from the exercise of the option and warrants are assumed to be used to acquire treasury shares at average market price. So, we already have the number of shares for our option shares. So, this time, we need to compute katong assumed treasury shares. So, how to compute? So, we need to compute first pilay value sa imong option shares. So, you have your option shares na 30,000 times the total option price of 150. Therefore, that's the proceeds from the assumed exercise of option. Mo na imong base amount to compute for the assumed treasury shares. Okay, so that's 4,500,000. Then, we divide it by the average market price para ma-compute na to pila ka shares ang kaya na to mapalit based on the average market price. Pero ang concept niya, if ato sang ibaligya sa third party, mo ni ang price based on the average market price ug mora pud ni ang number of shares na pwede na to mabaligya. But under sa option, di ba, since ang employee na to ang mopalit ana, so pwede siya makapalit og pila 30,000 shares ang iyang pwede ipalit na employee if si employee ang mopalit. But if it is it would be offered to the third party, pila ra ka shares ang ilang mabaligya. So they can only sell 18,000 shares. So mo na iyang 18,000 assumed treasury shares. Di ba? So based on the option price and the number of option shares, so you have 4,500,000 divide by the average market price of 250,000. Therefore, if it is it would be offered to the third party 18,000 lang ka shares ang ilang mapalit. So that is considered as the assumed treasury shares. So we compare the option shares, okay, and the assumed treasury share. Note that the total option price for employee share option shall include the fair value of share option in accordance with 47A past 33. Diba, gi-mention kagaina if under share options, fair value is included in the exercise price. That's why it was added, diba, 130 plus 20, 150. Okay, for the computation of your diluted earnings per share, you have 100 original You have incremental 30,000 option shares. You have the assumed 18,000. So this is now the incremental. This is the potential ordinary shares of 12,000 if i-exercise na employee ilang right or ilang option. Okay, so therefore, your total ordinary share is 112. To compute for the diluted earnings per share, you have the net income divided by the total ordinary shares. So that's 44.64. Therefore, diluted ba? Okay, dilutive ba? So the answer is yes because 50 ang basic earnings per share, 44 ang diluted earnings per share. Pero sa sugod pa lang, kita naman siya nga dilutive, di ba? So that's 150, okay, 250. Kani po sa how about if options issued during the year, kinapod tayo changes sa computation niya. Let's say, if the options are outstanding during the entire year, these are assumed to be exercised at the beginning of the current year. But how about if the options are issued on March 1 of the current year, the incremental ordinary share would be for 10 months or 10 over 12 or 10,000. So, gi-averaging na po siya because we base on the issuance date. Muna yung bantayan ha sa problem. If kano sa outstanding, diba? January ba or gi-issue sa during the year? So outstanding sa on that issuance date. Okay, for the computation, no changes on the basic earnings per share, but since there is nautro ang issuance date niya, we need to average the incremental ordinary shares. So kani. Okay, also if there is actual exercise of options and warrants, mautro na po imong basic earnings per share. Nga naman, di ba? Because there's actual exercise. There's actual or there's addition or actual nga na issue nga ordinary shares. So the computation procedures with respect to the option shares or shares covered by warrants are, okay, the option shares or covered shares actually issued are average from the date of exercise to the end of the current year. Diba? Kung kanus sa actual na exercise or actual converted, dito ka mag-base in the computation of your basic earnings per share. And for the incremental ordinary shares, average from the beginning of the current year to the date of the exercise of the option. Kani, bantayan ninyo. The incremental ordinary shares are averaged from the beginning of the current year to the date of exercise of options and warrants. Let's see the illustration. So you have net income. Okay, you have the option price of 150, option shares of 30. No values assigned to the share options. On April 1 of the current year, the options are actually exercised. On this date, the market price of the ordinary share is 250. Therefore, atong boto na 30,000 times the exercise price. Let's see the solution. Okay, di ba? So, computation of basic earnings per share since there is actual conversion, nadungagan ta dire. But we need to prorate because we need to compute the average, di ba? Since it was actually converted on April 1, therefore that's 9 months over 12. So, outstanding basic average outstanding shares for basic earnings per share is 122,500. Divide by the net income, so you have a basic earnings per share of 48.98. How about the diluted earnings per share? Okay. Actually, same lang sa computation, di ba? So, still it's 12,000 imong incremental ordinary share. But take note that dili sa pariha kagaina sa inyong preference share o convertible, di ba kagaina kung gano sa ma-convert or if there's actual conversion, di na nato sa i-average. Diba? Regardless, di na to sa average. Regardless kung ano sa pod siya na issue. No. Di na to sa i-average if outstanding siya on January 1. Diba? So, pero if issued sa during the year, we need to prorate. In this case, sa iya, even if there is actual conversion, ang iyang computation is starting on the issuance date up to the date of exercise. Okay, so since kamusta dito sa exercise? In this case, the market price of in April, which is the date of exercise. Okay. So, to compute for the average shares for the diluted earnings per share, so, the-average gapon niya, so that's outstanding, 100. Exercise of share options, that's 9 over 12, diba, from the date of issuance. So, that's 22,500. And weighted average incremental shares of 3,000. So, tanawan, ay nadugang. Ang tanawan ninyo, duha na kabuok ang iyang nadugang dire. Diba? Katong shares nga na-exercise, iyang gi-average. Diba? So, 30,000 times 9 over 12. Tapos, ang iya pong weighted average incremental shares, iyang gi-prorate from the date. Diba? Ang ingon dire, the incremental ordinary share are averaged from the beginning of the current year to the date of exercise of options and warrants. Therefore, since it was exercised on April 1, so from the beginning of the year, that's 3 months. So 3 months na po yung gikuha sa incremental ordinary shares. Aside from the incremental ordinary share, it was also included in the computation ang actually converted nga shares, di ba? So kani, di ba, April 1, 9 over 12. Same sa imong basic earnings per share. So, gi-add na po dato ang weighted average incremental shares of 3,000 from beginning of the year up to the date of exercise. So, di-prorate siya. So, you have the total of ordinary shares of 125,500. Then, to compute the diluted earnings per share, you have 47.81. Okay, still dilutive, di ba? Because lower compared to the basic earnings per share of 48.98. Question. I think that's the last illustration for the option price, options and warrants. Question so far for options and warrants. So, bantayan lang ninyo kung sa na-issue. Sir, dili January. Sir, dili Jan 1 nag-outstanding beginning of the year gapon mag-start ang incremental. January gapon siya. Assumption January. Not unless gi-issue siya on a different date. Parehaani. Diba? If the options are issued on March 1, dili ka mag-start. Pero if the problem is silent, so the option and warrants outstanding on January 1. So, mag-start ang incremental na computation. Naman to. Sa okay, kani, mag-start ang incremental computation nimo if there is actual conversion or actual exercise or gi-exercise siya. So, di ba, ingon sa dire, the incremental ordinary shares are average from the beginning of the current year to the date of exercise of the warrants and options. So, kabali, duha ka book yung idugang pag-compute sa inyong diluted earnings per share or number of ordinary shares. Kani, naka-average ang katong actually converted. Okay, tapos, katong incremental ordinary shares nga naka-average siya starting from the beginning of the current year to the date of exercise. Pero if dili ka niyang case, katong mga previous nga problem, katong first case niya, so it is assumed that outstanding siya at the beginning of the year, or it is assumed nga na-convert sa beginning of the year. Katong incremental ordinary share nimo. Not unless kung gi-issue siya during the year. So same lang gyapon kung gi-issue sa during the year, you need to prorate the incremental ordinary shares. But if inani ang case, di ba, if there's actual exercise of the options and warrants, na kay duha i-consider. Di ba maotro imong basic earnings per share tapos ang imong amount dire maotro pud siya. So nakaidugang nga duha ka amount. Okay, other questions? Sir, if dili January 1 nag-outstanding, beginning year gyapon mag-start ang okay, ang imong question is if dili January 1 nag-outstanding, beginning of year gihapon mag-start ang incremental. The answer is dito ka mag-start kung kano sa gi-issue. Kano sa gi-issue. So from issuance date gihapon ka up to the date of exercise. Di ba kay kagay na kung gi-issue siya on March 1 in this case, okay, lagi kung gi-issue sa on March 1, di ba ang computation niya 10/12 siya. Okay, sa kay naglag. Okay, nag-loading. Okay, so sugod ka sa issuance date, dili ka if during the year sa gi-issue. Okay, parehaan di ba March sa gi-issue, so nag-start po sa pag-compute sa incremental, gi-proportionate niya 10/12. Okay, I hope that's clear. So how about the others? You have questions? Okay na ba to? Nasabtan ra? Okay, sige. Okay, so if you have no questions, okay, dili sa ta. What if net loss? Diba? Kung natay basic earnings per share, naputay basic loss per share. Okay, so in this case, no, sa illustration, so you have the entity provided the following data for the current year. So you have net loss of 5 million, you have ordinary share capital of 100 par, 100,000 shares, 10 million, then you have preference share capital 10% cumulative, then can be converted into 40,000 ordinary shares. So, computation for basic loss per share, you have 5 million, di ba? Regardless loss siya, we need to deduct the preference dividend since preference and it is cumulative. So, we need to pay the preference shareholders of 200,000. Then you have total loss to ordinary shareholders divided by the outstanding. So, your basic loss per share is 52 pesos per share. Observe that the preference dividend is added to the net loss to get the loss to the ordinary shareholder because it is cumulative. Again, cumulative, regardless declared or not, you need to, deduct the preference dividend. How about the diluted loss per share? When you say diluted loss per share, what will happen to your basic loss per share? Increase or decrease? Diba? When you say diluted loss per share, what will happen to your basic loss per share? Increase or decrease? Okay, it would, di ba? Kung may kag basic loss per share, di ba, ay diluted loss per share. Kung basic earnings per share, ubsan niya imong earnings, how about sa loss? Okay, increasean ang loss, di ba? So, may diluted loss per share, di ba? It would increase your basic loss per share. Okay, so based on the computation, you have net loss of 5 million. Since, again, diluted, we assume that the preference share is converted into ordinary share. Therefore, we no need to deduct the preference dividend. Because again, the assumption is na-convert na siya. So, wala na preference shareholder nga bayaran sa dividend. So, that's why 5 million. Okay, you have the actual 100,000. You have the converted preference share of 40,000. You have total ordinary share of 140,000. So, 5 million divide 140, that's 37.71. Question, dilutive ba na siya? Diba? So, ingon sa dire, observe that the diluted loss per share is lower than the basic loss per share. So, if the entity has a net loss only, the basic loss per share is computed and reported. Because the diluted loss per share is the same as the basic loss per share but not reported anymore. So, again, diba, dapat, kung may diluted, dapat mas taas siya compared sa mong basic loss per share. But in this problem, diba, niubos siya, 37.71. Actually, muubos good siya compared to your basic loss per share. Nga naman, because wala may changes, di ba, na itabo sa imong although na changes sa numerator, pero nag-increase gyapon imong denominator because there is assumption of conversion of the preferences. So, yun sa derif, the entity has a net loss, only the basic loss per share is computed and reported. The diluted loss per share is the same as the basic loss per share but not reported anymore. The reason is that potential ordinary share would always decrease the loss per share. Yes, because again, di ba, kuan siya, madungagan imong denominator, so mugamay gid ang imong result. And therefore, the effect of assumed conversion is always anti-dilutive. So again, it's anti-dilutive because iyang result always anti-dilutive because it would, instead nga yang patasan, di ba, ang loss per share, gamay na noon siya. So therefore, it is not dilutive. So that's why it's considered as anti-dilutive or always anti-dilutive if there is loss. Okay, so I hope that's clear. Inom sa ko tubig ka, Jot. Padayon na nato kay sayang kung maputol ang discussion. Because on the next part, what if, di ba kagaina sa atong illustration, isa-isa ra per transaction. Di ba? Kani nga transaction, naaray isa ka convertible bonds, kani nga transaction, convertible preference share ra ang present, kani nga transaction, options and warrants ra ang present. What if, sa isa ka transaction, naato sila tulo present? Diba? What if sa isa ka transaction, okay, naa si convertible bonds, naa si convertible preference share, naapod si options and warrants. So, manang gitawag na to multiple potential ordinary shares. Diba? What will happen in the computation of our diluted earnings per share if we have multiple potential ordinary shares? So, kung pintag multiple, kani sila tulo present sa isa ka transaction. So, medyo complicated na pod ang iyong computation, di ba? Pag-compute sa diluted earnings per share. Ano man, because we have some items nga atong i-consider if present ni sila tulo or if duha lang ang present. Basta kay sobra isa. So, how do we account transaction if there are multiple potential ordinary shares? Okay, if there is only one dilutive potential ordinary share, there is no accounting problem. Di ba kagayin na kung isa-isa lang, okay, medyo okay na siya. Pero what will happen if a problem arises where the entity has two or more dilutive potential ordinary shares? Unsay buhaton nato? So, considering whether potential ordinary shares are dilutive or anti-dilutive, Each issue or series of potential ordinary shares shall be considered as separately or individually rather than in the aggregate. So, how do we account for this? So, di ba, we need to identify if these three potential ordinary shares are dilutive or anti-dilutive. Diba? And how do we do that? Diba? We need to separate it, diba? Pag account. Bali, ato silang i-consider separately or individually rather than in the aggregate. So, because we need to identify if dilutive ba ni siya or anti-dilutive. So, in order to maximize the dilution of the basic earnings per share, each issue is considered in sequence from the most dilutive to the least dilutive. In other words, the potential ordinary shares shall be ranked based on their contribution in terms of incremental earnings per share. So, ang button na to, ani, since we consider them separately or individually, we need to identify kinsa ang pinaka-dilutive sa ila. So, ato silang i-rank from the most dilutive to the least dilutive. Kay may tabo ani, kani ang pinaka most dilutive. So, unahon na to siya pag-account. Okay pa, lower than the basic earnings per share. Okay, next na pod, this is the second. This is the second dilutive. Okay, or second most dilutive. Pag-account na to siya, pwede ang makompute na to nga diluted earnings per share is greater than your basic earnings per share. Therefore, ang kanang imong number 2, that is considered as anti-dilutive na siya. Because again, the purpose of diluted earnings per share, it should be lower than your basic earnings per share. So kung pag mo compute tag number 2, mula pa sa basic earnings per share, the answer is dito lang ta sa number 1 kung pila mo na compute dira. That's the diluted earnings per share. 'Di ba? I-rank nato sila from the most dilutive to the least dilutive. So, we base them dito sa ilang contribution. 'Di ba? Contribution in terms of incremental earnings per share. So, based on the incremental earnings per share. We rank them based on the incremental earnings per share. The potential ordinary share with the lowest incremental earnings per share is ranked first. So, mo na itong kinalan computon sa ila tulo. Okay, so i-ranking na to sila based on the contribution of incremental earnings per share. Kinsay pinaka-lowest og incremental earnings per share, siya ang pinaka-most dilutive. Okay, so again, kung kinsa ang pinaka-lowest incremental earnings per share, that's rank number 1 or let's say the most dilutive. Okay, so based sa ilang contribution sa ilang incremental earnings per share. Okay, how do we test these three types for dilution? So normally, options and warrants are dilutive, di ba? Dilutive siya if the option price or exercise price is lower than the average market price. If that's the case, if dilutive siya, automatic the option and warrants are the most dilutive because options and warrants have no impact on net income. Therefore, if your exercise price or your option price is lower than your average market price, this is considered, your option is considered as dilutive. And this is the most dilutive among all the potential diluters. So, if mo qualify guys as dilutive na, number 1 na ginayang rank. Why? Because the option and warrants are the most dilutive because option and warrants have no impact on net income. Di ba? Base kagay na pag natay option and warrants, wala tay bag-uhon sa atong net income. Di ba? Wala tay bag-uhon sa atong net income. Wala say impact sa atong net income because purely iyang effect dito lang sa atong outstanding shares. Di ba? Unlike sa bonds, di ba, mag-add tag interest expense. Sa convertible preference, i-delete na to, i-deduct ang preference dividend. Mahulog ya po niya ato sang gibalik. Di ba? So, or wala ta nag-deduct sa atong net income. Okay, so, convertible preference share, the contribution of the preference share to net income is the amount of preference dividend that is avoided because of the conversion. So how do we compute this incremental earnings per share? Okay, so your incremental earnings per share, kani mo ni ang computation for option and warrants. How about convertible preference shares? How do we compute for the incremental earnings per share? Incremental earnings per share. So the formula is you have incremental earnings per share for convertible preference shares equal to the amount of preference dividend divided by the number of ordinary share into which the preference share is convertible. So number of shares, ordinary share, okay, to be converted. Okay, this is how we compute for the incremental earnings per share under convertible preference share. So we need to get the preference dividend, di ba? Mao man itong adjustment, divide by the kung pila sa ma-convert. Pila ka shares ma-convert imong preference share into ordinary share. Number of shares, number of ordinary shares to be converted. Or mali ang paggamit. Ano lang? Number of ordinary shares. Okay. Number of ordinary shares if we convert the convertible preference share. So that's how we compute the incremental earnings per share. How about for the convertible bonds payable? Your incremental earnings per share, that is equal to your that is equal to your interest expense net of tax. So kato atong gi-add back divide by the number of ordinary shares if i-convert nato siya. Okay, medyo dagan kag timan-an ani. So based on this computation of incremental earnings per share, so ato silang i-rank kung kinsa ang pinaka-lowest. But normally, if dilutive na si options and warrants, sila na ang number 1. So kanila lang ang maglaban kinsa ang second rank 2 and rank 3. Your convertible and your convertible preference share and convertible bonds payable. So kung kisay lower ani sa ila duha, mo to ang second rank or rank number 2. Okay, so yan yung dire. If the incremental earnings per share is lower than the basic earnings per share, the convertible preference or the convertible bonds is probably dilutive. Okay, let's have the illustration para mas maklaro. Okay, medyo kuan siya, lisod sa i-absorb kung basa lang ta. Ilang, ginhawa lang sa gamay ha. Parday, rapunta mahuman. Okay, this is the illustration. An entity provided the following data for the current year. So you have income from continuing operations, you have from discontinued operations, then you have ordinary shares actually standing, and option shares. Di ba tanawa, naay option shares, naay preference share, naapag yung bonds payable. So, grabe sa kakuan, grabe kadaghan kayo diluters, di ba? Potential diluters. So, ato na sa ikinahanglan, i-identify, di ba? Okay, ato na sa i-identify. So, we need to compute first. Okay, kinsa ang ato silang ipangitan ko kinsay dilutive ba ni sila tanan or dili. Okay, so this is the solution for this illustration. The preference share capital is 5% cumulative and convertible into 25,000 ordinary shares. So convertible preference share dining naa dire. Tapos 5% cumulative pagid siya. Second, the bond payable has nominal rate of 10% and convertible into 40,000 ordinary share. Therefore, convertible po imong bonds payable available. Okay, procedures. The first step is to compute the basic earnings per share. Of course, di ba, we need to compute the basic earnings per share para natay basis if dilutive ba ni atong mga potential diluters. Okay, so you have income from continuing operations. Okay, so yun sa in calculating whether potential ordinary shares are dilutive, the income figure used as the control number is the income from continuing operations. So we need to separate the continuing operations and the discontinued operations. Okay, so income to ordinary shares, you have 4,750, di ba? Because the preference dividend is cumulative regardless declared or not, we need to deduct the preference dividend. So that's 4,750 divide by the actual ordinary shares, that's 9.50. This is now our basic earnings per share. Okay, let's move on with the diluted computation, diluted earnings per share. The second step is to determine whether the potential ordinary shares are dilutive or anti-dilutive. So, identify sa nato, kay basin din nag-compute na ta, tapos dili dahil to anti-dilutive dahil ang imong mga potential ordinary shares. Sayang lang imong time, di ba? Because if anti-dilutive, di ba, ignore na to ang computation. So, we need to test first, di ba? Test for dilution. So, the options are dilutive. Kung tanaw na to, ano daw, dilutive ang option. Di ba? You have the option price 60, 75 ang market price, average market price. Therefore, lower. So, automatic, dilutive. Okay, dilutive ang atong options. Okay, so you have the options are dilutive because the option price is lower than the average market price. The number of incremental ordinary shares is determined as follows. So you have option shares of 50,000. Okay, di ba? To compute the assumed treasury shares, you need to multiply the option shares times the option price, divide by the average market price. So, we have 40,000 assumed shares. Therefore, we have incremental ordinary shares of 10,000, okay, for your options. So, automatic, this is dilutive. So, rank number 1 is sa diretso. Okay, so later you will see, di ba, unsa ka importante ang ranking niya. Unsay effect niya sa computation. Second is convertible preference share. Let's test if dilutive ba ni siya or dili. Diba? So convertible preference share, you have, diba, the computation for your incremental earnings per share. You have the annual preference dividend of 250 divided by the incremental ordinary share from conversion. Ingon sa dire, the preference share can be converted into 25,000 ordinary shares. So, that's why 25,000 ordinary shares. So, your incremental earnings per share under convertible preference share is 10 pesos. Okay, ingon sa dire, the convertible preference share is anti-dilutive daw. Why? Because the incremental earnings per share is higher than the basic earnings per share of 9.50. Diba atong basic earnings per share kagaina is only 9.50. Pero, ang amount nyo to na-compute under kang convertible preference share, yung incremental earnings per share is nabot sa 10 pesos. So, therefore, this is anti-dilutive. So kung anti-dilutive siya, ignored in the computation of diluted earnings per share. Okay, so next, you have convertible bond. How about our convertible bond? Dilutive ba ni siya or anti-dilutive? So let's see. To compute for the incremental earnings per share, diba, that's interest expense net of tax divided by the number of shares na ma-convert si convertible bonds. You have 350 interest expense net of tax divided by your number of shares nga ma-convert siya of 40,000. Therefore, your incremental earnings per share is 8.75. Therefore, it is lower than your 9.50 basic earnings per share. So, this convertible bonds payable is potentially dilutive because the incremental earnings per share is lower than the basic earnings per share. So, the three potential ordinary shares are be ranked in the computation of the diluted earnings per share starting with the lowest incremental earnings per share. So, if ato silang i-rank, automatic this is rank number 1, di ba? As long as kung dilutive na siya, automatic rank number 1 na siya. So, based on the incremental earnings per share computation, kisay next nga lower, that's 8.75. So, number 1 si options, number 2 si bonds payable, number 3 si convertible preference share. Sir, on si application anang ranking niya. Okay, tanaw na to on si application sa ranking. Okay, di ba? First, you have the options are always ranked because options have no impact on net income and therefore have zero incremental earnings per share. Therefore, si options dahil kay zero incremental earnings per share because di ba wala sa effect sa computation sa net income. So, buta na to, 0 divide pila to atong incremental, that's 10,000. So, wala sa effect. So, pinakaubos gid siya. Second is you have the convertible bond na 8.75 incremental earnings per share and you have third is the convertible preference share, 10 pesos. Okay, observe the following computation of diluted earnings per share in sequence from the most dilutive to the least dilutive. So, inani siya ang purpose sa ranking. Tanaw ninyo, you have your income, you have the ordinary share, and you have the earnings per share. So, first, you have the basic earnings per share, di ba? For 750 income, you have the 500 ordinary share, that's 9.50. This is our basic earnings per share, 9.50. Since the first priority is the option, so unahon na to si option. Og add, di ba? So under option, di ba, walay effect sa imong income. Tapos ordinary share, we have incremental ordinary share of 10,000. So madungagan na karon. So diluted atong income base amount 4,750 divide by 510. That's 931. Therefore, si options, dilutive yun siya. Why? Because from 950, di ba, niubos sa 9.31. Second rank is the convertible bond payable. Okay, so that's why si convertible bond payable ikaduha. Di ba, unsay effect niya pag natay convertible bond payable, we need to add back the interest expense net of tax of 350. That's why gi-add na to ang 350. That is the interest expense net of tax. Pila ka shares gyud sa ma-convert? 40,000 shares. Therefore, karon na natay total base amount or adjusted income for the second rank of convertible bonds of 5,1 divide by the outstanding shares, di ba? Considering the options and the convertible bonds. So 550 na. Therefore, pila na siya? 9.27. Tanaw ninyo, dilutive ba siya? Yes, dilutive. Nga naman, lower ka 9.50, so atong base amount karon si 9.31 na. Di ba? Kay para makita nato kung dilutive ba si convertible bond. So di na ta mag-base sa 9.50 because again multiple siya. So after pag-account nato kang options, dapat 9.31 na atong base amount karon. Question, dilutive ba si convertible bond? The answer is yes because from 9.31 nahimo sang 9.27. Okay, last. Third na to nga rank, we have the convertible preference share. So sa convertible preference share, di ba, we need to add back the 250 preference dividend. Because our base amount is the basic earnings per share computation nga net income. So gi-add na to ang 250, also ma-convert sa into 25 shares. Therefore, your base adjusted income is 5,350, your adjusted outstanding shares is 575, then your earnings per share is equal to 9.30 or diluted earnings per share 9.30. Notice that the diluted earnings per share is increased from 9.27. Siyempre, atong base amount karon kaninang nakangkon after considering the bonds. So, 9.27. So, from 9.27 to 9.30, when taking into account the convertible preference share, accordingly, the convertible preference share is ignored in the calculation of the diluted earnings per share. Therefore, gi-compute lang sa dire, pero this is ignored in the computation of diluted earnings per share. Sir, question, if that's the problem, pilay answer, sir. Pilay diluted earnings per share. The answer is 9.27. Okay, the answer is 9.27. Dili 9.30. Again, di ba, dilutive dapat siya. So, i-dilute niya ang 9.27 nga base amount. Instead nga yang i-decrease, itaas nun sa 0.03. So, dili siya dilutive ang imong convertible preference share. Di ba kagain nagipakita pa ganito sa computation because higher iyang incremental earnings per share compared to the basic earnings per share of 9.50. Kung mangutana, sir, pila ang basic earnings per share? The answer is 9.50. Pila ang diluted, sir? 9.27. Dili po 9.31, 9.27 because in the problem, multiple potential ordinary shares ang involved. Okay, this is the illustration, di ba? So, actually, separate dapat imong continuing operation o discontinued operation. So, basic earnings per share, pero same lang og denominator. Lahi lang ang amount. Okay. Because the component of your net income, pwede man siya appeal ang discontinued operation. But, di ba, if there is discontinued operation, so you just base the amount for the continuing operation, especially in the computation of the katong kagaina kani dire. So don't consider the discontinued operation. Okay, so diluted po, gi-separate niya ang from continuing and from discontinued operations. Okay, question. Sir, if diluted si option, sir, ikapila naman sa ranking. Posible wala siya appeal sa ranking. Kung i-rank nimo siya, iwit siya siguro. Pero di naman po sa mag-matter gyud kay kung dili siya dilutive, regardless i-rank nimo sa or dili man gyapon nimo sa i-appeal sa computation. Kanila yang gibuhat dire for illustration purposes, gi-appeal gyapon niya ang convertible preference share para makita kung ni-decrease ba gid siya or wala. Ana lang siya. So, asa ang final answer anang diluted earnings per share? 9.27. Okay, the answer is 9.27. Kanila, gi-compute lang niya for illustration purposes. Kay, di ba, kagaina, pag-compute pa lang na to daan sa incremental earnings per share, ang atong convertible preference share is already considered as dilutive. Because, higher ang atong na-compute, di ba, 10 pesos atong na-compute, which is higher compared to your basic earnings per share nga 9.50. So, automatic, by computing the incremental earnings per share, identify na diri kinsa ang anti-dilutive. For purpose of illustration lang, iya lang gi-rank gihapon, tapos iyang gipakita sa computation. Murag i-prove niya nga anti-dilutive bagid siya. So, na-prove na to nga anti-dilutive. Why? Because, diba, supposedly, after considering the convertible bonds, our base amount now is the 9.27. So, para ma-considered as dilutive, dapat ang result niya mas lower than 9.27. Since the computation for the convertible preference share is niabot sa 9.30, so dili siya considered as dilutive. So, again, if it's not dilutive or anti-dilutive siya, di ba, ignored in the computation of the diluted earnings per share. Therefore, the answer is 9.27. Dili 9.30. Question. Sir, if dili anti-dilutive ang preference share, let's say may mo sang 9.26, the answer is 9.26. So, kung if dilutive sila tanan, computon gid nimo siya. Kay kung if dilutive na siya tanan, magkanam gyud nagka-decrease ang amount. If that's the case, kung dilutive siya tapos 9.26, the answer is 9.26. Napa, question clarifications? Nasabtan ra ba? Sa kana nga problem, sir, if ang gipangutana is pila ang dilutive earnings per share sa convertible bond payable, the answer is 9.31. Normally, ang problem, mangutana na siya, pila ang diluted earnings per share, ang answer, katong pinaka last, which is kaning 9.27. So kaya ang imong question is, dili, ang convertible bond is 9.27 ha, ang 9.31 sa options na. Isa. Sa kana nga problem, sir, if ang gipangutana is pila ang diluted earnings per share sa convertible bond payable, answer is 9.3. The 9.3 is refers to if i-account na to ang convertible preference shares. 9.27 after accounting your options and convertible bonds. 9.31 bali wala mangutana sa multiple. Dili na mangutana kay ang question ana pila ang diluted. Dili gyud ka mo answer og 9.30. The correct answer is 9.27. Kung ba kinsa ang pinaka last ato. Because again, pag-compute pa lang gayon na sa kaning atong incremental earnings per share, anti-dilutive na imong convertible preference share. So pwede na gay dili na nimo sa apilon pag-compute. Pwede di nimo sa apilon pag-compute. Kani lang for purpose of illustration nga na-prove gid siya nga anti-dilutive siya. Why? Because, di ba, instead nga iyang i-increase ang 9.27, nahimo nun sa 9.30. Instead nga iyang i-decrease, nahimo nun sa 9.30. Iyang na-increase na noon. Okay, other questions, clarifications? Sir, if multiple preference share, unsay may tabo, duha balik ka diluted earnings per share, let's say na number line 4 after sa last preference share. So, you say multiple preference share with different percentages, di ba? Katong, let's say, 10% preference share, 5% preference share. If that's the case, i-rank yapon nimo siya. Di ba? Atong first button, i-rank nato sila ay test for dilution ta. So first ato sa silang i-test for dilution if dilutive ba siya or dili by computing the incremental earnings per share. So separate siya pag compute. Let's say 10% preference share, 14% preference share. So ato silang i-compute. Yes, na additional line item because upat naman siya, di ba? Upat na siya ka item. So upat na sa ka-item, so madungagan sa ka-item. So i-identify sa nimo una kung dilutive ba or anti-dilutive. After i-identify nimo, i-rank din nimo siya. Okay, basin dai ang first, ang 10% nga preference share is rank number 2. Tapos ang 14% nga preference share kay last iyang rank number 4 nya convertible kay number 3. Number 1 gyapon ang options. So i-rank sa sila before ka mo proceed ani nga computation. Kani i-rank sa kay di ba ang order pag-compute ani is based on their ranking from the most dilutive to okay, supposedly gani dapat wala na i-appeal ang anti-dilutive pag-rank because di ba ang ingon niya dito most dilutive to the least dilutive iyang term gigamit. Pero kanilang gi-present lang gyapon, di ba, for para maklaro siya, mas clear ang presentation. Question, clarification.